It's Friday night, the 23rd of September, and market came down hard this week. It did not do what we wanted, or what we expected exactly. But I want to review why, and I also want to review what the big picture is and what components of what we said last week are still true and still in place. All right, so the big picture, as we have been talking about for months, was there was going to be a summer rally. It was going to end in September, and that the market would come down into November, December bottom, make new lows for the year. The low earlier in June was around 3,600 on the S&P, and that it would go up after that into February, March of 2023. We did not expect a super crash. We were looking for 3,400 as a target for the low in November. And we were saying that the 20.16 year cycle was also due on December 10th if it comes in exactly to the day, which it really would be expected to do, but nevertheless, the last 5 times it has come in extremely close to the right day. That would be December 10th. So we're thinking there's a low November 23rd or 4th, and then another low on December 10th based upon that cycle. So that's the overview. We're looking at a 75.61 year cycle, which has been repeating, and it's still there, and also a 49 year cycle, which has been repeating. And you can see in the following chart, both of those overlaid upon each other. And they both agree on the future. They both had highs in September. Our high came in August 16th, so we're off a little bit. The lows in both cases were December. They both go up into February of 2023, and then they fall significantly into the late part of 2023. So we're not expecting a super crash here or anything dramatic, but we did expect, and it is happening, that the market's coming down in the fourth quarter. Now, the short-term stuff, of course, we weren't right this week, and I want to show you why, and also that we probably aligned it. We probably got it figured out now. One of the cycles that's very reliable is this 4 lunar month cycle. And we saw that in the last year or so, it's been going up 2 months, down 2 months, up 2 months, down 2 months. And it was natural to assume, since the last high came in the right place, that the next low would be October 13th. The market would go down a few days and then do what that pattern had been describing, which was a little rally until the 23rd, sideways until October 3rd or 4th, and then down until the 13th. Well, what's happened is that 4 month interval is flipped. It's inverted. But it's not just inverted in terms of where the low is, it's inverted in terms of all the pivots. Now, why that happens? It probably happens because the momentum oscillator was calling for a 3,700 level. It was getting close to it, and it was easier for the market to get to the 3,700 when it was already at 3,800 in order to fulfill that target, and then it could release. But what's happening instead is the market is going down into the 23rd, and that's where we expected a high point. And we expected another high point around October 3rd, but a sideways, almost a double top type pattern, which now would invert to another low on October 3rd. So if the pattern repeats and it continues in this inverted form, which it very well will, most likely will, this low comes in here. We go a little lower next week into the 3rd of October. Instead of being a low on the 13th of October, we now expect a high, exactly the opposite, and then a decline down to new lows by the 21st of October and a rally to November 7. Now, how deep the low on October 21st will be, nor the low on October 3rd, it's unclear, but it is probably lower than it is than we just had today, which got down to the 3660 area and closed at 37.11. We're still below any of the other days this week. But there is chance that, and if you look at the 4-month cycle, it tends to make a low around here, and it could come in Monday, the 26th or the 27th, pop up for a day or two, and then come down again into October 3rd. Very short-term stuff now. It's not that relevant. What's really relevant is we're expecting lower prices. We're expecting a decline until third week of November or mid-December. We have been the whole time. We're looking for 3,400, which seems very close, but truthfully, we're pretty close to some lows, and so most likely the market's going to bounce into late October, go sideways into early November, and then come down in November and do some sort of a bottom in November, another bottom in December, okay, before going up to February. So that's the overall story. Looking at the super short term, which I rarely do, but it's interesting, it looks like we've seen from this most recent high of 2 weeks ago, we've seen a 1, 2, 3 down. And the third wave has 5 waves in it. And you can see in this next chart, 5-minute breakdown of the 5th wave of that decline has 5 waves in it. So it's possible we finished, or we're very, very close to a turn over the next day or so, and that we should see a bounce and then another retest or new low on the 3rd of October. That point, we might see a decent rally for the 10-day window up until the 13th. Okay, so a little bit lower into late next week, a rally to the 13th of October, and then down again into new lows in third week of November, and then a possible double bottom or slightly lower low in December. That's our very detailed, story. But, basically we've been saying for the longest time the market was going to go down for 6 months into July in 2022, and it did. It would rally over the summer, and it did. The high came in earlier than we expected on August 16th, and that was throwing off the short term a little bit. But we caught that high on August 16th, expected a 2-week break, which we got. We've done very close to, very correct weekly predictions all year, and this one was wrong. But we did expect 3,700, and finally came in. We thought it would be on the 19th. It came in later in the week. We're off by a few days. And now we're expecting this inverted cycle to change the October pattern, where there's a high in the middle of October and another high early November, like around the 7th of November, followed by further decline in November and December. Okay? All right, I wouldn't get so nervous about this market that you think it's dying. It's probably not. If you look at the 75-year cycle, the low in December is potentially lower, but that pattern goes up into next year and then really has trouble the following year, as does the 49-week cycle, as does the 120-year cycle, which has a very similar pattern. It goes down into around the same time, 120 years ago. November 23rd was a low. We had a high in February of 1903, and then it kind of held up until May and then disappeared. It went really down hard in the second half of 1903, which we expect in the second half of 2023. So that's kind of the story. This is not the super terrible part of the story. I don't expect a crash here. Do expect lower prices. Do expect a lot of consternation, a lot of nervousness, a lot of angst, a lot of news stories that the world is definitely coming to an end. But nevertheless, it's going to drag out. It's a longer-term secular bear market. It'll last at least another year to year and a half, and it's not likely to do a 2008 collapse at this point. It's not ready. It's not near the end. All righty. Thanks a lot. By the way, do some thumbs up, and we get a lot of subscribers from that. We love it. And catch you next week. Take care.